There's been a little bit more weakness in the past few weeks, and I think that has a lot of people concerned that a stock market crash may be coming. So this week, I'm going to first answer that question: is a stock market crash coming? I'm also going to tell you how to deal with these weak markets, and then I'll do my normal market analysis of stocks, commodities, the bond market, and currencies. And then finally, I'm going to look at the day trade of the week, which is a great example of where you can find opportunity to make money in this market. But let's begin with the question around a potential crash. Now, we've seen in the past few weeks a fair bit of weakness, and it really centers on the concern that the US Federal Reserve is not going to lower interest rates as much as had been hoped. And the reason primarily is that the stock market the economy in the US is stronger than expected. Jobs numbers have been good. Inflation numbers have been bad, which means inflation has been a little bit higher than anticipated. And so since the last meeting of the US Federal Reserve, this concern has been becoming greater. And I'm going to show you a chart in just a moment to show you how that works. The bond market has been very weak. Now, in real terms, what that means is when the bond market goes up, the interest rates that you pay on mortgages, on what businesses would pay for loans, the interest rates are also going up. And so even though the Fed hasn't been raising interest rates, the fact that they haven't been lowering rates or telegraphing that they will lower rates as much is causing this pessimism in the bond market. So let's take a quick look at that bond market chart. And I'm going to use this one here, which is the inverse of the 20-year Treasury. And the reason I use the inverse is because it's the easiest way for us to visualize interest rates. If this chart is going up, then interest rates are going up. Because if this chart is going up, that means bond prices are going down. So you can see that we had the market here, interest rates moving up here, a little pullback coming into December, and then quite a strong move to the upside. Now, what's critical about this chart is that it is hitting this old high here, which should provide a little bit of resistance. Now, it's not exactly perfect because this is a leveraged ETF. So let's jump into the TLT, which is the normal bond market chart. And let's go to a 3-year here. And there you can see where we have some support. There's long-term support, which is when interest rates were at its highest back over here. And we're approaching that point. So there is a place where the market should bounce back in the relative near term. All right, so now let's jump back into this. So what's next? Well, I think the key thing that we have to think about is there going to be a crash? And in order to judge that, we actually have to look at the chart of the S&P 500 or the Dow. S&P is probably the best one. The Russell small caps show you what retail investors are thinking, and it's much more sensitive to interest rates. So we're going to look at that one in a moment. But let's just jump into the chart of the S&P 500, because this is where I see some cause for concern. This is the daily chart. So this is going back about 8 months. And you can see here this trend line was broken here. Now, typically when markets top, they break down from a falling top. Now, this was a new high, and so this breakdown was not from a falling top. But look what happened late in the week this past week. We built some falling tops. In other words, this high is lower than this high, which is lower than this high. And now we're testing this support zone. And on a closing basis, we actually closed at an almost 2-month low on Friday. And that is a cause for concern in the relative short term. I think this could be indicating we have some more weakness to the downside. Now, does that mean crash? Well, when I think about crashes, I think about major sell-offs. And for that, I'm looking to the 3-year weekly chart to see if the upward trend line has been broken. There's the upward trend line for the US stock market, the S&P 500. You could draw it a little differently. There's different ways to do it. I always like to start where the trend upward starts. I could also draw it across these inflection points. Either way, we're at this pretty critical place where if we start to break down with some volume through that trend line, then you have to be concerned. Now, that hasn't happened yet. The market is still in an upward trend, and therefore we can say that we're okay, but we're certainly sort of hanging on by our fingernails. And if we start to see that upward trend line on the weekly time frame break down, which could happen this week, then I think you want to get quite defensive with the overall market. Now, I said, how do you deal with that? Well, a couple things, of course. You can move out of stocks that are giving you sell signals. So if you're in more of the large cap, real companies, they're going to be much more affected by the market. And if the market starts to sell off, then these big companies, and I'm thinking the leaders of the market like Amazon, Nvidia, Google, Microsoft, they will start to pull back because they are heavily correlated to what the market does. Now, there are stocks that are not heavily correlated to what the market does, and that's where you want to focus your attention. These are stocks that I call alpha stocks. They're stocks that are trading on their own story that typically show that alpha by trading abnormal volume. So if you're going to look to be a buyer of stocks in a market that is moving lower, then you want to focus on alpha stocks. Alpha stocks, again, are those that are trading with abnormal volume. So if normally they trade, 1 million shares a day and all of a sudden they trade 10 million shares a day, that's alpha. That's something is going on there that is driving that abnormal volume. There's more buyers coming into that stock, and it's usually because that company has something going on specific to the company, like good earnings or perhaps a new product, perhaps they're testing a drug. If it's an oil company, perhaps they found a new deposit of oil, something like that. So that's what alpha is, and that's where you want to focus your attention. You have to be fussy, and there's nothing wrong with sitting in cash while the market is moving lower, if in fact we do get that breakdown. Now, the one other thing that you can do is trade the volatility ETFs. These are exchange traded funds that are based on the implied volatility, typically of the S&P 500. So UVXY is a symbol, VXX is a symbol for volatility ETFs. I can pull up UVXY, which is a leveraged ETF on volatility, and you can see that when there's some weakness in the market, like we had mid-December, that thing can jump very quickly. That went from $20 to almost $30 in just a couple of days, and it's starting to move up again. And here was a time when the market had a fairly substantial sell-off. You can see how these volatility ETFs can really do well in that environment. All right, let's get into the normal market analysis, and we've already kind of looked at the S&P 500, so let's jump into the NASDAQ 100, which is where our tech stocks are. And there you see the same problem that I highlighted with the S&P. We are building falling tops and we're breaking these trend lines. And so on the daily time frame, that's a bit weak. Now notice the sentiment stock score is still pretty good, 62. And of course you can get the stock scores for any stock traded in North America. Just go to stockscores.com and look up the stock scores. And while you're there, if you want to get my weekly free email, right here, click on this little See More button. I send out an email every week with a trading lesson and usually a few stock picks, which have been doing quite well lately. All right, let's get back to the QQQ because I want to look at the 3-year weekly chart. And there you can see that the trend is up. It's been upward since January. But what I want to show you in January is how the trend reversed. We had this downward trend in 2022 because of rising interest rates. And then we made this little double bottom and then started to build rising bottoms after breaking the downward trend. Now you can take that exact thing and flip it upside down, and that now tells you what you want to watch for a break or for a reversal of this upward trend and perhaps a start of a crash. And that is if we break this upward trend line, just like we broke the downward trend line there, and then build a falling top, which we sort of already done, then that's when you have to get concerned for more weakness. That hasn't happened yet. And again, the stock score, sentiment stock score, 62. And we generally like stock scores above 60 for a market or for an individual stock. So we're still okay, but we want to be fairly careful watching the market right now. IWM, much more sensitive to interest rates, and you can see the selling pressure in the month of December because of that sensitivity. And we broke down through a little floor price here, so that's not a great sign for the small caps. And you can see the sentiment stock score in this is only 46, and that's because the momentum is starting to turn. Now here is our upward trend line on the IWM. It's much choppier, and it is, you could argue, broken that. We don't really have a falling top yet. And so if we bounce back and then break down from a falling top, then some greater cause for concern. But certainly the small caps, again, much more interest rate sensitive, are an area of concern. With that said, though, the alpha stocks tend to come from the small cap sector. So Most small caps probably best to be avoided, but some small caps, those that are trading with that abnormal alpha volume, are worth considering. All right, let's go into the Canadian market. T.XIU is the symbol for the TSX. And there you can see a very well-defined falling top. And we just need now to break the upward trend line. So where's the upward trend line? Let's look at the 3-year chart. And we can draw a line starting at the low of the trend and just coming across there. And we're still okay, right? We're still above that upward trend line. We got a little extended because of the strong performance of gold, and that is heavily influenced on the Canadian market. But I am concerned that we're building this falling top, and if we start to test that upward trend line and break down through it, then you want to be quite defensive. All right, let's take a look at gold. GLD is the symbol, and there you can see the parabolic run to the upside, the break of the upward trend, the build of a falling top, but we haven't broken down. We're in this what's called a pennant pattern. If we break down from the pennant, then you need to be concerned, but really gold doesn't look too bad. It's stable, and it's just starting to break to the upside a little bit from what we call a flag pattern, much like you had back here. And that could lead us to another leg up in the upward trend for gold. Sentiment Stockscores 61. It had dipped down below 50, but now it's starting to rise again. So I think that's a decent thing to keep an eye on for opportunity. Another thing to watch for opportunity is the oil market. Look at how oil has performed over the last couple of weeks. We see some real strength there where oil has been dead money for a couple of years, really. It is starting to show some life. Now, if we look at that 3-year weekly chart, we see that there is resistance here. And so we're going to have to break through this. But I think oil could be one of the vehicles that does well in 2025. It's been building this ascending triangle pattern for a while. It still needs to break through this resistance. It still needs to build some rising bottoms, but it is improving, and that shows up in a pretty strong sentiment stock score, which has really been quite weak for most of this year. All right, let's take a look at currencies now. Now, I'm going to pull up UUP, the chart. There's a dividend that get paid out, and that's what causes this big gap. So you kind of have to ignore that. Essentially, this is still in an upward trend, so we're bullish on the US dollar. Let's take a look at GBTC, which is Bitcoin. It's a bit of a concern. We have this sort of parabolic move up. We've built a falling top. That means pessimism coming in. If we start to break down through this floor, this is sort of a head and shoulders topping pattern, and that would imply some weakness, probably bringing Bitcoin back to the upward trend line and around this level right here. So a little bit of caution warranted on Bitcoin. Now, the last chart we'll look at is TLT, which is again in that bond market chart. And you can see it's been very dismal, downward move there. Sentiment stock score is very, very low. I think it's getting a bit oversold. I think we are approaching that support zone where it should bounce. And if it does, that may keep us from going into that crash zone. But you got to watch for, a reversal until we get a break of the downward trend line from a rising bottom. I don't want to get too optimistic. So my ratings then. You'll see my short-term ratings for all of the stock markets are bearish. And for US small cap, long-term is actually neutral because we are testing that upward trend line. Bullish for the other markets long-term, but they're very close to a reversal, so we have to watch closely there. Gold neutral on both time frames. It's looking better. You could almost go bullish short-term, but I'd like to see a little more strength to confirm that break of last week. Oil bullish short-term, long-term neutral. US dollar bullish on both time frames. Bitcoin, a little bit of weakness short-term, so I've got the short-term rating at neutral. And then bonds bearish on both time frames. All right, at the top of the video, I talked about the importance of trading alpha stocks. And when we're day trading, when we're swing trading, that's an absolute must, to focus in on the stocks that have alpha, that are trading abnormal volume. And the way you find that is looking for abnormal activity. So this week's trade of the week is an example of that from Friday. It started to trade very abnormal volume shortly after the open, and it triggered one of my favorite strategies right now. I call it the early riser. It's a break of a pullback in the opening upward trend. So here we have the opening upward trend, a very abnormal volume. So it's got alpha, very liquid as well. Pulls back. This is people doubting this strength, which is fine. And then we break it right there. And you can see a little blue dot there. That's an indicator I created to help find these, what I call early riser strategy breaks. And the result was, a very nice move from $5 to $7.50, 50% move in just a few hours. For a market that was weak, overall market was weak, Here's a stock that still managed to move up, and the reason is it has alpha. What's alpha? Abnormal volume. Look for that abnormal volume supported by an upward price move. Those are the places you want to focus on trading when the market's a little weak like it is now. If you want to learn more about what my strategies are and how I approach the market, make sure you check out Stockscores.com in the trader training area. If you enjoyed this video, let me know by clicking on the like button, subscribe to the channel, and most importantly, trade well.